Hi everybody, hey, Vinny Fisher here, the CEO of Fully Accountable, and I want to talk to you today about what a CFO is, why you need one in your business, and how to actually, as the business leader, really effectively make sure you not only have the right person on your team, but using them in an effective way. I'm here to talk to you today about the Chief Financial Officer, also known as the CFO, and what really is the CFO. What does it do? What does he or she bring as a value proposition to the company? How do you actually hire for one correctly? And how do you even know if you really need one? Like, these are all things that you struggle with in a good growing company. And so here at Fully Accountable, we focus on small businesses in the range of 1 million to 40 million in revenue. Now that's a big gap. And in that gap, we have learned a lot of things about small businesses. We specifically focus on e-commerce and digital companies. And what I want to do today is kind of walk you through how to make a wise decision as a business owner, knowing first off what a CFO is. Secondly, how do you hire one? And really, like, what are the decisions made about that? And how you really understand to work effectively with one. So first, let's start with what a CFO is. You know, a CFO is a Chief Financial Officer. This is something greater than just a bookkeeper or a controller or a data analyst. The CFO actually is the leader. It's the leader of the accounting and finance department. It's the leader inside of the business who is an executive, who's able to think about operations through the lens of being a financial expert. What happens with most small businesses is we tend to look as the CFO as all of the bookkeeper, the controller, the data analyst, and this chief officer, this executive who is being asked to think operationally about a lot of parts of the company and make wise decisions. Here's where that gets a little bit wrong. That's 4 jobs. And so a small business, as it starts to grow, starts to think about what it needs for its company. And their first move when they start getting mature is to just hire a CFO and throw everything at him or her. And so this is where things start to go awry really quickly. And so the most important thing to do is think about is the CFO as the quarterback of the finance department, not someone who's going to do all 4 of those jobs. And that's where fractional services, as well as understanding that role, is a critical piece. And we'll talk a little bit more about that in a business, like when you can decide you need a dedicated or fractional CFO. But why would you need a CFO in the first place? Like, that's an important question. So let's park there for a second and understand why you would need one. A CFO really should be someone who's a trained accountant. They understand finance at a very high level. He or she doesn't necessarily need to be a CPA to have that designation, the certified public accountant. That may or may not help that role at all, but at a minimum, your CFO should be well versed in finance and understand the nuances that go along with making bigger financial decisions. So what does a CFO help you do? A CFO helps you with being really the liaison or the executive between the rest of the executive team, operations, and your accounting and finance department. He or she is there to really help you think bigger with better finance questions. Ultimately, so that the bookkeeper, the controller, the data analyst actually have someone leading them in a way to make better decisions on how to track consumer behavior, how to make financial decisions with respect to where to spend money and not to spend money. These key decisions financially are critical. And a lot of times a business owner is either a good marketer, likes to operate and work with building a product or a service, or people. They're rarely this financial minded. And so having this person on the team helps round out good decision making at the operational level. So a CFO is like an extension of the executive team through the finance arm. It is not necessarily just, the person who's doing the bookkeeping. So one of the common mistakes a small or medium-sized business struggles with is when to decide whether you need a CFO and how to decide that. Well, first, I think in order to decide when a small business needs a CFO, you have to decide some things. There are 4 primary functions that exist in accounting and finance department, especially in the e-commerce and digital world. One, the bookkeeper. This is the person who is doing the daily and weekly entries of all the things that belong within your accounting software. Two is the controller. This is the person or activities that close out, tighten up your books, reconcile your accounts, understand and give you a bottom line snapshot in your management reports of how you're doing in your back office from a weekly and monthly basis. Your daily stats or analyst person is someone who is a third position who is in charge of a company that has a lot of transactions, being able to look at the key performance indicators to, one, be an early warnings report, two, be able to make good analytical decisions about a lot of the information that your numbers are telling you. That data analyst position works a lot hand in hand with your CFO, as do the other roles. And so the CFO sits above that. The CFO sits above those functions. And he or she's job is to actually help the owner know what to do with that information, make timely decisions. But here's what your CFO is not. Your CFO is not all of those other roles. What happens with good leaders is we get massively frustrated where we think we hire a CFO to do all those jobs and they don't do them. And so you got to really understand, in looking for a CFO, you should first make sure those basic functions are being met, or that CFO is getting those basic functions done for him or her. And here at Fully Accountable, it's one of the things we do. We support CFOs. We actually also can be and are a fractional CFO. So how do you know if you need one? Well, you need one if your company size is at a level where you're above $1 million in revenue. And by the way, might I add, less than 8% of all companies get to $1 million in revenue. So it's a very rare place to be. Maintaining that and growing from $1 million standpoint up is a hard place to be. So why do you probably not need a CFO before that? Well, there's other issues the company needs, and maybe putting those types of resources into a company below that revenue standard might not be the best use of the dollars. You may need to expand your offering. You might need to acquire more customers and more revenue before you'd even decide whether or not you need a CFO. But I would first look to that 7-figure mark, and then I would look first fractionally. You need first look to whether or not you need one full-time or on a fractional basis. And then thirdly, I would make sure you have somebody who's positioned to succeed with all the other resources in place. And so what does a CFO do? A CFO will help you develop new practices inside of accounting and finance so that you can have better measurable data, so that you can make good operational decisions on hiring. You can benchmark against yourself and as the industry as to whether or not you're spending money in the right places. We say a lot, you have a leaky bucket, and the CFO's job, primary metric, is profit margin. And in order to improve profit margin, the CFO's job, he or she needs to look within your management report and understand what parts of the leaky bucket of the company need to be improved so that you can overall improve the profit margin of the company. So how do you do that? You break down your profit and loss statement by categories, and you benchmark that against your own history, but the last week, last month, last year, and then you also go and look to industry data of where you compete for consumers, and you do the same thing last week, last month, last year. And you look where you are off on your labor, your cost of goods sold, your media cost of acquiring a customer, your indirect expenses like your office and your incidental things you spend on supporting your company. Well, all of those areas lead to expenses that take away from the margin, the contribution margin, or the profit margin of your business. All of those categories are what the CFO handles, helping you make wiser and mature decisions to improve margin. Because that's all that matters at the end of the day for the CFO. He or she needs to work from the bottom up. They're the defenders of profit margin. They shouldn't be in charge of all of the operational details, but they should be always looking at operational details through the lens of profit margin. What's a wise decision? What's within an industry standard? By the way, you can be understaffed just like you can be overstaffed if you are paying attention to your benchmarks. So lacking financial detail is usually what gets someone into the biggest trouble when they talk about their company. And so a CFO, just to make sure we're real clear, When a company wants to move forward with a CFO, a business owner needs someone who's going to help them establish sufficient financial detail in order to make good decisions. The study done by Harvard showed that leaders of businesses usually switch their accounting professionals or go look for one because they lack proactive, forward-thinking professionals. And if I could leave you with one thing that I would want a CFO to do for me, is to always strive to be proactive and forward-thinking, looking through the lens of financial information or creating that information in order to actually help the company really grow and at some point be able to, once it dials in its margin, scale their offerings they have in front of them. How do they get there? Well, first you got to have good, sound principles that separate you from the owner, the owner, from the business. Our motto here at Fully Accountable is we're your back office solution. We work to create an environment of accounting and finance for the business and improve those areas. One of the ways a CFO can do that is to be able to have all of the tools and resources in order to offer the right questions and the right timing to an owner so that he or she is capable of being able to use financial information and good, sound wisdom from a trained CFO to help with those decisions. Before, you could only hire a CFO if you took the commitment to hire one full time. But with today's technology and the resources available, companies like ours exist so that you can offer this fractionally to companies. You don't need to go make a full-time investment for a CFO. I'd highly recommend you go down the process of having an outsourced accounting and finance company with a specialty who niche down to what you do specifically as a company, help you build this component within your company. And really from there, you'll be able to see very quickly how the value of a CFO inside your organization can allow you to think bigger, understand a bigger story, and look at it through the lens of detailed financial information to help you make great decisions to win at margin, profit margin to be most specific. So if you want to win at the leaky bucket, I would really encourage you to look at a CFO today. Look at what he or she can bring into your company. And I hope this was helpful. If it is, share it with somebody who could benefit from it. And if you like it, leave us a comment. Tell us what you would have liked to have heard more about. And we'll be happy to share that information as we continue to help you make wise decisions in building out your accounting and finance team. Have a great day.